Today, I need to speak seriously about what's happening in the Bitcoin market because things are not as simple as they look. Many people think the price just moves randomly, but behind the scenes, powerful forces are pushing the narrative in their favor. That's why it's so important to understand what's truly happening so you don't fall into the trap. Right now, Bitcoin is still moving sideways. We haven't seen a huge breakout to the upside, nor a dramatic crash. The price is stuck between two key levels, inside a tight range, and this kind of behavior usually occurs before a major decision point in the market. There's a strong support level, both psychological and technical, that's still holding for now. On the weekly chart, we can clearly see that Bitcoin has been bouncing off the 50-week moving average. This orange line has a strong track record. When the price stays above it, bull markets tend to continue. When it breaks below with conviction, that's often the start of a deeper bear market. We're now right on the edge of that line. And while many traders might panic here, this is exactly where the big players, the whales, step in. They have the liquidity, the patience, and especially the intention to scare small investors into selling right before the next move up. There's also the possibility of a death cross forming soon, a pattern many consider bearish. But historically, when a death cross happens during a bull trend, it often marks the bottom before a strong recovery instead of the start of a crash. Another key factor, on-chain data shows that whales holding between 1,000 and 10,000 Bitcoin have been accumulating heavily. Over the past weeks, they've added nearly 50,000 BTC. That's never random. These entities always accumulate when the average person feels unsure, and unload when everyone is euphoric. We also have to look at the macro environment. Gold has been rallying strongly, nearly at a new all-time high, which is pulling liquidity out of crypto and risk assets. But this won't last forever. Once gold stalls or retraces, that money may return to Bitcoin and other digital assets. Political factors are also in play. The U.S. government has passed a measure to reopen operations, and new financial stimulus is on the way. There are even talks of direct payments, which would inject more liquidity into the economy. That means more capital available for markets, including crypto. All of this creates a scenario full of tension. We are at a critical technical level where a breakdown could trigger fear, but even that might be part of the whale strategy. Push the price down just long enough to make people sell cheap, then send it flying back up. If we do see a temporary drop, there's a real chance of a sharp V-shaped recovery, fast, aggressive, and painful for everyone who sold in fear. That's how markets punish the impatient. The bigger picture is still bullish. Even if we see dips along the way, the long-term structure hasn't changed. Historically, major Bitcoin tops appear roughly every 4 years, suggesting the real peak may come closer to 2026. Meanwhile, the sideways market is still profitable for those using automated strategies or grid bots, which thrive on volatility even without huge price swings. This proves a key point: opportunity never disappears, it just changes form. So in summary, we are standing at a decisive moment, with mixed signals on the surface, but many deeper indicators suggesting this is not the end of the bull cycle. Instead, it's a phase of uncertainty and accumulation. The whales know this, and they're acting accordingly. The most important thing is not to be fooled by movements designed to trigger fear. Bitcoin's history is clear. When fear peaks, the groundwork for the next rally is being built. And right now, we may be closer than ever to that next explosive move.